All right, welcome back. We are looking at the all-time high for the S&P 500. So congratulations. I'm sure if you looked at your 401k or a good amount of your stocks in your portfolio, they're either at highs or near them. So this is good news. It's a good sign. We finally got past this top from 2021. It's been a long time coming. 2021, that doesn't seem like that was that long ago, but been a lot of chop, a lot of red, and a lot of green to come back. So congratulations there. Let's get into what we're looking at. So opportunities, still the same. Nothing's changed here. I'm still looking at the semis. Boy, they are just, that train is not slowing down. ETFs like the SPY or the Qs, that's the one I hold the most, or the SMH, which is an ETF of the semis. We've talked about this. REITs, small caps. I'm going to reiterate here on the small caps. Know what you own, or just buy the whole index. Buy the IWM to get exposure to the whole index. I think second half of the year, they're going to outperform. They're going to do well, but there may be a little bit of red in the short term. Let's take a look. Let's take a look at IWM or the Russell 2000 small caps index. Sideways. It wouldn't surprise me if it's got more to pull back before breaking out of this range that we've been in. So who knows? Again, these are a lot of small companies that their cost to borrow money is still relatively high. So until we actually get those rate cuts, these companies' earnings may still be a little bit tough. And there's a lot of regional banks, there's a lot of Bitcoin miners, so a lot of things where when they're hot, they're hot. When they're not, they're not. So earnings will be the tell-all. I didn't look too much into the bank earnings just because that's a sector I don't really care too much about. But if there was something crazy, I would have heard it. So that's good news. Let's go back. Where are we at here? Mag 7 on a dip. The Magnificent 7 stocks on a dip. So let's see if we get a dip. As I've mentioned, be ready for Chop City in Q1, Q2. It's been a little choppy, but nothing too crazy. Earnings are going to shake things up. And now we need to watch the yield curve again. I've talked about this. If you don't know what the yield curve is, go find one of my videos in the past. I do a deep dive into the yield curve and why it's important. What we're seeing here is we've been inverted, meaning we've been below this black line, and now we're starting to get close to uninverting. Now, once we uninvert, we're on a recession watch. Again, this isn't some crazy voodoo number. Every time we've inverted and come out, these gray bars is when we hit a recession. So you can see after going inversion, and then coming out of that, a recession ensues shortly after. So if we do finally break through this black line, uninvert, we'll be looking for a recession. Now, we won't know until after the fact. That's what's so funny. We may be in one right now. It wouldn't surprise me if we are in one. It's just not going to be hopefully anything like 2000, 2008. Hopefully we get a little gray bar like we did in the pandemic. So we'll be on watch. Now, thankfully, when we do get a recession, or if we do, the Fed will cut rates, and who knows what else. But it's going to be painful. There's going to be layoffs. We're all going to feel it. So be prepared now. You should be prepared for a recession and for another 30% run in the stock market. So be prepared for either scenario. That doesn't mean if a recession's coming, sell all your stocks. That doesn't mean I don't see a recession, put every dollar you have into the stock market. Be prepared for both scenarios. So we're watching that again because we've come close and then we've pulled back, and now we're starting to pull up again, and we'll have to keep an eye there. So we're taking a look at that, and for me, this is the time to be more cautious and patient. So there is a few things on my shopping list to buy. I have been buying a little bit, but I'm being very patient just because the market, it's at all-time highs. The semis are ripping, and I want there to be a little bit more chaos, a little bit more pain for me to have another good entry point, like we did in October. That was a great entry, and that was being very patient. Let's take a look. So especially for the semis, when we look at the SMH, bought a little in here, bought a little in here, and bought a little in here, and that's it. I think maybe I bought some in here somewhere. I think I did buy some on the breakout, but that was an impatient buy. These were much better buys when there was some pain, and this was the best. And that was a long wait out from the whole summer. So we've come a long way fast. Now I love this stock. I love these companies, but I want to be patient. So, and you're getting paid to be patient if you have money in a money market account, 5%. That's cool. So I'm being patient, and earnings, there's going to be some, like I said, hopefully there's some shakeouts, some shakeups. And with that being said, we want to take advantage of those if we get them. So buy earnings dips on strong stocks that have been hard to get in. So an index is a different story, because an index isn't going to fall unless all the semi stocks fall. But let's just use NVIDIA for example. If NVIDIA says something in their earnings, or if there's a lot of profit takers when their earnings come, their earnings is not for a while. But let's say we get a 5% instant drop. I may nibble on that pullback. And maybe there's a 20% drop to come after that. I don't know. Who knows? But definitely one like Microsoft, I feel like we've seen the volume here around earnings, a lot of red volume around earnings, and we get a dip after that, and then it recovers over time. Microsoft isn't going anywhere. Apple's going to be interesting with their headset. Boy, wow. Apple shot up real quick in the last few days. It was looking like it was going to curl over. I haven't noticed that. But a lot of green volume. So maybe we get another sell-off into earnings or after earnings like we've had in the past. There may be an opportunity for another entry. So that's what I'm looking for. Those really strong stocks, some cybersecurity stuff I'll be looking at. And the other one I want to mention that has been on the list, and we've talked about it. Here's a shopping list. I'm not going to go over all these names. Tesla, I did buy some today. Really interested on their earnings. Wouldn't be surprised if it moves 20% in either direction. And I'm prepared either way. If it gets cut 20%, that's not going to look good or feel good, but I'm prepared to buy some more for my position, for my portfolios. And if it skyrockets 20%, that's okay with me too. I prefer for it to go down, but I'm really interested to see what their earnings are and what they say. I'll probably have a separate video on Tesla coming out after their earnings. I didn't have time to do one before, but just know it's a big earnings, and really their commentary is going to say it all. So we'll have to see. They have been cutting prices, but again, when they cut prices, that's due to they're cutting price to match demand. So it's not a great sign that they're cutting price, because that means demand is a little bit softer. But also they don't want to be sitting there with if they produce 1,000 vehicles and only 900 have been ordered, they're going to cut prices to get that next 100 ordered. And then when it's matched, they'll raise prices. So their prices are always moving based on supply and demand. Rates get cut and there's a lot of demand, prices are going to go back up, hopefully. But we'll have to wait and see. PayPal is the one I want to talk about. I was going to buy some at 50 if we got the opportunity. I listened to their CEO, new CEO, came out and said that he's gonna shock the world. We'll see. So let's pull up the chart, because it has been making a move. Ooh, big red candle today. But we got past this 200-day moving average. Now we've been here in the past. The question is, do we finally hold up and move forward, or are we gonna just stay getting rejected by it? You can see we've poked out a few times. So I'm interested to see their earnings. I'm interested to see their plan. The new CEO, young guy, came from Intuit. Lot to like there. It's a company I use all the time for my businesses. I've never had any problems with them. I see myself continuing to use them. They take a little portion of my withdrawals, so they're always getting a little slice from me, which is fine because they provide a good service for me. But I could see this going either way. I could see them coming out with their master plan to shock the world and no one really caring, and then the stock goes right back down to 50. Or I could see people finally capitulating on the sell side, and then it moves up. But today was a big red volume candle, so that's not the best sign, but who knows? We'll see. So that's one that I got my eyes on, especially for this earnings cycle. I think that's about it I wanted to cover today. So not a whole lot new here. We hit all-time highs. Market's chugging along. Tesla's getting killed. I will probably purchase a little bit more Amazon. Amazon and Tesla are the two stocks that I have the most conviction in, as well as the semis. But long term, Tesla and Amazon. The semis I think are going to be in a really good spot for the next 5 to 10 years. And then we'll have to reevaluate then. But I'm sure they're going to be around forever. So I might scoop a little bit of Amazon before earnings, just because I'm about 30% away from my goal position there. So I may pick up half before, and if we get a dip, finish it off there, the other half after. But we'll have to wait and see. So I'll have more videos coming out for earnings plays or post earnings. Until then, have a great day. All-time highs, baby. Peace out.